So I think today is a very important day. Why? For the very simple reason, Fed is going to announce. It started already discussing the what we call FOMC meeting has already started, and tomorrow the news will come. Will it hike the rate of interest tomorrow or not? So I'm going to discuss that. But before I begin this webinar, just a small disclaimer that this webinar is just to enhance your understanding about the market. It's more of an education in nature. Please consult your financial advisor before buying or selling any stock. Investment in securities market are subject to market risk, and past performance is no indicator of future returns. With this, if you look at it, the market is discounted. There will not be a rate hike tomorrow on 1st November. Of course, these numbers the announcement will come post market hours in India. That is tomorrow night it will come. But overall, if you look at it, the general consensus seems to be in the US there is no rate hike. Now, if you look at it, the number that are little bold is as of today, and what you see the data in the bracket as of 19th October, and how things are like, just to make you understand. On 19th October, 93% of the people those being voted basically said that there will not be rate hike. That increased to 98.2% now. That increase. On 19th October, on 13th December, that's the next FOMC meeting, 61% were expecting no rate hike, which increased to now 74%. And same way, 52 has increased to now 66. In other words, more and more probabilities are getting built up. There will not be any rate hike. This is the first time we are talking about marginal possibility of 1.8% probability that there could be 25 bips rate cut. अब तक rate cut का तो agenda में था ही नहीं. And this is the first time. So slowly, I think US market seems to be warming up to the fact that now there is a possibility of a rate cut. While it is there a 1.8% probability for the 1st November, there is right now, there is no rate cut probability on 13th December and 31st January 2024 probability. Rate hike, almost 0% for tomorrow, that is 1st November. But it came down from 36.8% to 24.5% for 13th December. And on 31st January from 40 to 29.6. So slowly and steadily, I think market, the general consensus seems to be that no further rate hike. In fact, if you remember, Jerome Powell did indicate that there will be one more rate hike before we have done with the rate hike cycle, and now market seems to be more and more get convinced that there will not be any rate hike. So do not expect rate hike tomorrow from the Fed. That's a very simple this one. Now, should we get little worried because of rate hikes? I think my answer is right now, please remove that as a possibility that should impact your market sentiment negatively. Now, if you look at last 1 week, we were all frightened by the fall in the mid and small cap. If you remember, I was in front of you and we discussed that. In 1 week, the mid and small cap has outperformed and closed in the green as compared to the large cap. So if you look at Sensex, advanced decline ratio, there are more decline as compared to the advanced. 8:22, 13:33. But if you look at the mid and small cap, 67 advanced, 57 decline. 584 advanced, 366 decline. What does this indicate? It clearly indicates that buying seems to be coming at the lower level. And those who are sitting on the fence at that some point of time started deploying funds in the mid and small cap. That interest seems to be coming back, of course. That's the data. And of course, I'm not saying that all bad things are there now in the price. Market nature has to be volatile. It will remain volatile. But right now, one thing which clearly shows that if the prices go down in a mid and small cap, there are people willing to come and buy. And that's a very, very healthy sign for the mid and small cap. Now, a lot of fear factors are easing now. The factors, if you look at it, yield on US band, which is corrected now after touching 5%. It's below 5% consistently. Crude oil prices have come down, and there was a fear that because of, Israel now having a ground attack to destroy the Hamas terrorist hideouts, they could flare up and there could be more countries joining and creating an attack on Israel. And due to that, the crude oil price can flare up. I think that seems to be easing. Having said that, the World Bank yesterday came out with a report saying that crude can go to $150 per barrel. That's a worst case scenario that it be. But if you look at the base case, they are looking at about $81, $82 per barrel, if my memory serves me right. So that's another factor which was making market a little jittery, has started. Third thing, US economy, as we know, that came out with a very strong set of data for the GDP growth for the third quarter. And that's another reason market seems to be taking little, not too much worried about it. Indian numbers continues to remain very, very strong. And if you look at the commentaries from India Inc., post numbers are extremely, they continue to make us believe that second half would be much better as compared to the first half. So I think the picture right now on the earnings front, looking good. Macroeconomic factors are improving, and that's another good thing. But having said that, there's a crude oil price movement. If you look at it, 83 it came down to 82. The limited point I wish to come, it's just in a 1 week. 1 week doesn't define anything. What point I want to say, the market which was fearing that it could flare up, it has not flared up. In fact, if you remember, we were at $90 per barrel. When that attack took place on the Israel by Hamas, the price did move up to $90 per barrel, about $90 per barrel, which came down to now 82.30. In other words, almost 10% corrections has happened in the crude oil price post Israel-Hamas conflict, which really easing the pressure on the market. Having said that, India Inc. has come out with a very good set of numbers. This is the data which you can look at it. Sales 6.8% net profit growth quarter on quarter and 38% in Y on Y. And that's a very good set of numbers. Because of that, the trailing 12 months PE will keep coming down. But having said that, yes, there is a risk, downward risk. But having said that, the risk-reward ratio continues to be in the favor of reward. Last week, I had presented this downward risk, what could be the level it can go to. Having said that, these levels are not cast in the stone, am I right? Market may not go to this level itself. It can bounce back or it can further go from that. But having said that, we continue to believe that Nifty can touch 20,100 by December 2023 and 68,000 for the Sensex. That's our year-end target. With this, I must tell you, in case if there is a corrections, make corrections as your friend. जैसे वो दाग अच्छे है, सर्फ एक्सेल की एडवर्टाइजमेंट है, corrections अच्छा है मार्केट के लिए. क्यों अच्छा है? Because it makes a nice base for the next leg of rally. Beautiful, because no market can sustain at the higher level if it is keep going high. It has to have a up down, higher top, higher bottom kind of stuff. Correction also transfer good sales from the weak hands to the strong hands. It reduces investors' expectation from the market, and it also gives investors a good opportunity to buy the shares at the lower value. So make corrections as a friend rather than a reason to be fearful in the market. And if you would have observed in last 1 week, I know what customer basically in our PM is saying, मेरे को तो लगता है market बहुत नीचे जाएगा. I'll revisit this in the month of January. Now, this is not the way you can basically treat the market, am I right? And I believe that make corrections as your friend. In fact, instead of getting away from the market when the correction happens, you should be coming into the market. Because the simple law of creating good wealth is very simple. It says, buy low, sell high. And today, Ramdev Agarwal from MOSL said the market will double in next 5 years, which we have been saying for quite some time. Now that we also get endorses from our very veteran investor, Ramdev ji. So remember, the long-term trajectory of the market continues to remain extremely bullish, and hence any corrections in the market should be used as an opportunity rather than crisis. With this, our Markets Mojo has a good subscription scheme of 19,999, which comes with 2 years plus additional 6 months extra. This is exclusive offer only for our people, those who are attending the webinar on our website. You will not get this offer. Why? Because you might get with 3 months extra, or maybe the price would be higher. This is a limited period offer. I would request everyone to please avail this offer. With this humble request, before I open the floor for question answer, please don't post question that's already been answered by me, because it makes other people bored if I have to again repeat that. Please put your question only once. We will take it up on a first in, first out method. And third thing, this webinar is not to talk about stock specific. Why? Because the score of the company is available on our website. In case if you want to know, please log on to the website and see the score of the company available. Hence, the moderator is not going to pick up any question which is stock specific. Let's open the floor. Nayan is asking, if war continues per your view, how many point market may fall? So sir, I've given a data, how much downside the risk that is there, just for the benefit of you. Can you see the screen? Sensex 60,500, Nifty 18,200, mid cap 29,500, and small cap 34,800. And as far as the Fed rate, what was the question? What was the second leg of the question? What is if Fed increases the rate of interest, what will the impact? If at all there will be impact, it will be very nominal. If you look at whenever the Fed has high rate interest, it's not necessarily turn into negative for the market. In fact, market, see, to today right now it's discounted that there will not be rate hike. So you are right. Tomorrow if market is built in that there is no rate hike, and if suddenly rate of interest goes up, which has been done by Powell, it will negatively surprise the market, which could put some pressure on the market, which can bring down Sensex to 60,500, the lower level, or Nifty to 18,200. But having said that, probabilities is zero of Fed doing a rate hike tomorrow. That's what my understanding is. As we can see, the market looking volatile. When can we expect the market to get stable? Thanks for your continuous guidance. So Rimaji, thanks a lot for the compliment. See, I think in my 30 years of experience, one thing I've learned, that when you come to the equity market, it can never be stable. It has to be volatile. That's the nature of the market. In fact, it makes me worry when the markets are stable. Why? That means वो कुछ बड़ा गड़बड़ होने वाला है ऊपर या नीचे. So nature of the market is always volatile, and we should accept it. The moment we accept it ना, life में problem कम हो जाता है. See, the problem happens when our expectations and reality is a little, there is a gap between these two. The moment you accept कि market में volatility रहने वाली है, then you are fine in life. So I don't expect volatility to ease at least for next 6 to 7 months for a very simple reason. Because we have various events line up. I'll tell you what are the events line up. Assembly elections are taking place. Then the market will start discussing about the outcome of general elections. Before that, there will be a mini budget coming in from the government, and so on and so forth. So I think the market is going to, and of course then we have a geopolitical tension. So one thing making a prediction here, Rimaji, I think we need to all live with now the geopolitical tension. अभी कोई ऐसा होगा नहीं कि वहाँ पे geopolitical tension नहीं होगा. Market has to live with that, and it will keep happening. Sometimes it can happen with Israel, sometimes it can happen with Taiwan versus China, sometimes it can happen with Ukraine, Russia, It could be India, China, it could be some other parts of the world. But I think it is going to be there whether we like it or not. So I think market will remain volatile till the general election takes place. And hence, waiting for the market to stabilize and invest, there is no fun in that. Despite, and in fact, there was an interesting study. I think I was listening to someone yesterday, and of course, that's again what we stated is given a sign in 25 years' time, Indian equity market. Samir Dola gave an interview yesterday to me, and we stated this when 30 is equal to 5. In 25 years' time frame, Indian equity market gave higher returns than the US market in dollar terms, despite we had so many crises in last 25 years. And yet Indian market did well better than the US market. So I think one thing we must understand very clearly, whatever happens to the noise factor, Indian market trajectory looks extremely good from 3 to 5 years period. And hence, don't wait for market to stabilize, go ahead and invest. See, I know some investors, some experts come with their advice. You put 25% in gold, sometime in gold, 20% in equity, 20% in debt, and so on and so forth. I think that's not a right way to create wealth. You are basically playing too safe in life, and when you play too safe, your life becomes risky. You know, there's a very famous saying, if you don't take risk, the life becomes risky. So I think, I'm not saying that you should be blind in terms of taking risk. You should take calculated risk. But the moment you expand your time horizon, equity becomes a best class. So, Rimaji, my request, please make volatility as your friend. Don't expect market to stabilize at least for next 6 to 9 months. Bhupal is asking what would be the expected return of PMS portfolio after 5 years, and can I add more money in PMS after retirement after 3 years? So Bhupal sir, our endeavor would be to outperform the benchmark over a period of 3 to 5 years. We do expect market to give near about 14-15% return, that is Sensex and Nifty. So, and our endeavor would be to outperform that. So you can now look at the numbers. Can I add more money in PMS after your retirement? Definitely you can add, provided you don't need that money post-retirement for next 5 to 6 years. Why? Because whenever you invest in the equity market, come with a long-term horizon. We do believe that Indian equity market is going to have a golden period. And if that is so, by not investing in the equity market, we are going to miss out on a big rally that's in the offing. If you remember last year, we presented, made a webinar on 30 is equal to 5. And we stated that the amount of wealth that we can create, we have created in the last 30 years, similar kind of wealth we are going to create in next 5 years. Not only we are saying now, if you look at very recently, India would be the third largest economy by 2030 or something. Now that more and more approvals are coming from the external agencies also, which we have been predicting before these people started predicting. And they are now just endorsing our views. So we believe Indian economy is going to do extremely well. And if that's the case, and I was reading a very interesting article yesterday that India is going to reap a very rich dividend of a demographic dividend. And why I'm saying so, see how it is relevant. In Italy, you will be surprised to know that no newborn child has been born in last 3 months. आप समझो 3 महीने में एक भी बच्चा पैदा नहीं हुआ इटली में. What does this mean? There is no growth in the population. There is no demographic dividend. Either those who can produce children that don't want to do it, or those who want to do it but can't do it because of the age factor, other things, health-related issue. Am I right? So I think that's going to happen, a challenge for the complete European region. China, after having only one child policy, is now encouraging to have more and more children. Japan want to do something very similar. India has become a number one. I think we are going to pay very rich dividend of the demographic dividend. So while the world population will start declining, India is having, and India could be the supplier of labors, all the goods and services to the world. Why? Because they don't have a wherewithal to produce that or service that goods and services. So I think India is going to do very well. So Bhupal sir, post-retirement, if you don't need that fund for next 3 to 5 years, please come and add more money to the PMS. I am happy to inform you, sir. Our PMS customers have been adding more money to the PMS and adding more and more. to create wealth for their future generation. So that's exactly that they are doing. I'm very sensible they are behaving like this. So they already started with PMS. They are adding more to upscale in the portfolio. Frank is asking, stock sends trouble even though the economy is strong. The major US stock indices fell this past week, with the Nasdaq coming losing more than 3% as long-term treasury yields reached the 5% level for the first time in 16 days. The level is shockingly high to many, but only matches what passbook savings account paid in other era. Your comment on this? So, Frank sir, I think you're talking about the US economy, and I agree with you that I'm not a very big fan of US economy. On the contrary, I've come and time and again said that US economy is going to struggle in the years to come because of poor leadership. I think no one knows how to handle the economic situation. I think in US used to be the super dad for the world. It's a super dad, like it could fix problems, and no longer. Now that's where I keep saying, and this is not my view today. I've been kept saying for this. In dollar terms, also Indian equity market would do extremely well. People do get confused that Indian market should do well. If Indian market can do only well if the US market is doing well. Like yesterday, the US market closed in the green. Indian market did not close in the green, and why it could happen vice versa also. So my sense is that yes, US will struggle, and my understanding is that more and more central banks across the world will keep reducing their dependency on the dollar as a reserve currency. In fact, if you remember, there were news articles that a lot of countries want to now use other currency for their trade, bilateral trade. And that can increase further as we move forward, and that could reduce your dependence on the US. And if people stop buying the US as this one, that there will be a problem. Who is going to fund US? किसी ना किसी को तो fund करना पड़ेगा, किसी ना किसी को तो उसको buy करना पड़ेगा. So who is going to do that? So I see a lot of challenges, and that's why I said, so many for PMS customers, they ask us, my children wants to go abroad in the US for the further study 5 years down the line. Should we not take exposure to US market, because then we do run, we at least hedging our rupee against the dollar cost. And I keep saying that even in dollar terms, if you look at the 5 years time period, I think the Indian market will give you better returns as compared to the US market even in dollar terms. So I'm not so gung-ho about the US economy from medium to long term, but I'm extremely bullish on the Indian economy. I hope that answers, Frank, so your question. Ankur is asking, is it ever possible that the company gives weak or negative record, but share price rise post? Definitely, sir. It happens many times. And it happens vice versa also. The company may come out with a very good set of numbers, but the price goes down. You know why? See, the price goes up or goes down is a function of, number one, what is the expectation of the market. For example, if market was expecting company will report 100 crore losses, I'm just giving an example, and company come out with only 90 crore losses, yet the script will go up. Why? Because the losses are lower than what was expected. On the other end, if you are reporting 1,000 crore profit and the company come out with only 990 crore profit, the script can go down. Why? So that both can happen. Second thing, the script can also go up despite poor numbers if the commentary from the management is very good, and vice versa. If the numbers are not so great, or numbers are great, but the management say, no, my next quarter is not going to be so great, the company can come down. So Ankur, this happens all the time. So don't link the performance of the company and the share price. There is no link as such. I'll be very honest with you. Based on this, it's a function of expectation versus what the numbers companies deliver, and that decides how the price will react to the result. Raju is asking, what is the probability further downside 18,025? What should be the strategy to deploy cash? See, Raju ji, these are I said the possibility that can happen. I've never said it will definitely happen. Market may not go to that level also, or it can further go down also. There is the thing called certainty. we need to always look at the risk versus reward. And risk versus reward definitely favors in the favor of reward. So assume, okay, you are taking a cash call. You want to take a cash call. I'm asking a very simple. If the Nifty goes down to 18,200, 18,400, do you think you will have a guts to put that money at that point of time? Why? Because when the Nifty goes down to 18,200, 18,400, at that time the market will start talking about 17,000, 17,500. तो आप क्या सोचोगे? Let me wait. 17,500 पे लूँगा. That's what that happens, am I right? How many investors could buy in the month of March and April? We requested people with the folded hands कि अगर पैसा तो लगा दो, the risk reward is the favor of this one. कोई सुनता नहीं है, सबको तेजी में पैसा लगा है, मंदी में किसको लगाना नहीं है. And that's why I'm saying, what is the right strategy to deploy? If you have the money, please deploy. So because you are not here for 1 month returns or 2 months returns, you are here for long-term returns. And timing the market is extremely difficult. It looks so easy, it's not easy. I must tell you that. जब मार्केट में फेयर फैक्टर चालू होता है ना, बड़े बड़े जो सियाने होते हैं ना मार्केट के, they also don't have a guts to put money. They also, their confidence gets second. Why? Because there's so much noise. We all see, unfortunately, there is so much noise surrounding us because of social media, because of sort of this one. They keep you will not believe it does impact our psychological decision making. You'll be surprised to know that there is a study which was done and that there is impact our this one. So my suggestion would be, Raju ji, please go ahead. If you have the money, please go ahead. You are not here investing for 1 month or 3 months. That's what my advice would be. Jay Krishnan sir is asking, there was data that came out that 400x market volume is being traded on FNO while the advanced market risk is only 15. How do you infer this? So I think you are right. The FNO market has really become very, very big. And in fact, I gave an interview to one leading business newspaper where they wanted my view on this FNO, and I did say that view will come very soon in the newspaper. And I stated that unfortunately in India, despite 90% of the people lose money, people still want to go in FNO. I think it's become more of an addiction. And when addiction happens, आदमी को समझ में नहीं आता अच्छा क्या है बुरा क्या है. And that exactly, I am of the opinion that SEBI should make it mandatory that first thing to trade in the FNO, you should have minimum equity portfolio investment of 10 lakhs. And then it says how much exposure you should take it is only should be 20% of that this one. So this kind of checks and balance we need to put it just to ensure that people do not overtrade. They don't become speculative in their nature. Because today all the data is available with the SEBI. What kind of, because it's everything is linked to the PAN. So they know what investment I am having. Am I right? So they said, okay, तुम्हारे पास 10 lakh है, so you can take a position up to 2 lakhs in the FNO. But if you have 8 lakhs, you are not eligible to come in the FNO market. I think this is the best way we can, because ultimately public paisa guma rahi hai, and which is very sad thing. And unfortunately, people don't realize FNO is become a mechanism where the small and the medium-sized investors are becoming poor and making ultra HNI and institutional investors rich. Because वो पैसा घुमा रहे वो लोग पैसा बना रहे हैं. It's a transfer of money from poor to the rich. And unfortunately, each and every broker, even though they say it's risky, they keep promoting more and more FNO. On the top of it, our business channel would basically vouch that they are here to protect the investors. पर उनकी ज़्यादा कमेंट्री आप सुनोगे तो FNO के बारे में ही होती है. टेक्निकली ये लग रहा है FNO में ये हो रहा है वो हो रहा है. In a way, you are encouraging people to go more and more FNO. So, well, everyone says that FNO खराब है, but indirectly everyone talks about FNO only. In a way, you are basically encouraging them to do trade in more and more. I agree with you, Jay Krishna sir. It's a challenge, and I think SEBI need to really come out with some solutions to this. Manish sir is asking, how are you? I'm fine, sir. Thanks for your wishes. I have a couple of questions. Which sector will affect if rate cut in future? I think clearly, see the banking could be one that can happen. But I think when the rate cut happens, now almost each and every sector gets benefit. So don't look at which sector will affect. In fact, on the contrary, you should look which sector will get benefited. When you say effect, I thought you're asking in a negative manner. I think almost each and every, because see, when the rate of interest comes down, it increases demand for goods and services. It increases the purchasing power for the consumers. And when that happens, directly or indirectly, each and every sector participates in that. As per you, which sector do you think is going to do well after correction in mid and small cap? Please suggest. Thanks in advance. So we believe that pharma should do well. We believe IT software should do well. We believe paper should do well. We believe capital goods should do well. We continue to believe railways should do well. We believe defense should do well. So these are the sector, Manishji, we continue to believe do that. Do we have a couple of questions more? Can we take it very quickly, the couple of questions more, so that, because I've realized that sometimes we do have a question, but due to paucity of time, we are not able to take it. So in case if we have more questions, I'll take two more questions. Let's have it. Do we have? Huh? Yes. Yeah, please do that. Shyam Sundar sir is asking, one of the stock got highest possible rating for all our four, but score is not 100. Is there something got change in your scoring methodology, or we are missing something? I don't know, sir, which company you are saying, Shyam Sundar ji, which has a highest. See, it has to be have excellent, very attractive valuations. CFT has to be of the outstanding. Within outstanding, we do have a grade there, and technically it has to be bullish. Then only that score can be 100. But having said that, how does it matter? Sam Sundar, I'm seeing my worry more and more what happens. You all want to pinpoint इसमें ये गलती होती है, इसमें ये है. It's a strong buy. Am I right? If not 100, it could be 95, it could be 98, it could be 93. The fact of the matter is that means you're supposed to buy. Now, how does it matter if it is 100 है तो buy है कि नहीं है, और 95 तो buy नहीं है? ऐसा तो है नहीं ना. So there is no problem with the scoring method. It has been done, but the point is that it is a buy. That's a thing, strong buy. If you wish to buy, please go ahead and buy that. Don't worry too much, Shyam Sundar ji. Last question, we'll take it. Will you say, I want to accumulate some corpus in next 3 years to purchase additional square feet in my building? One is goes for development. So I need your guidance. Should I create SIP in small cap fund or rupees 34,000 per month, or accumulate the amount quarterly, halfly to invest in model portfolio? So Vinit ji, see, I think you have a very specific requirement. You have the visibility that 3 साल में आपको वो पैसा चाहिए. Now market by nature is volatile. My suggestion would be go for SIP in the Nifty 50 ETF. Keep doing that. I think that's a one way, because then you are not taking a risk of a fund manager performing or not performing. Then you are basically taking a risk on the Indian economy, because if the economy does well, Nifty should do well. Am I right? So please do that. Do SIP in the Nifty 50 ETF. That's the best way you can do that, and then you can fund your additional what you call square feet in the redevelopment project. With this, thanks a lot everyone taking time out and attending this webinar. Tomorrow I have an exclusive webinar with our PMS customers. It's also a time for to do the performance review with them. Sorry, tomorrow we are doing equity outlook. Sorry, I stand corrected. So tomorrow, please come and join me. Tomorrow is equity outlook. Why it's the first day of the month. Very interesting data that I'm going to share with you. Please come and join me tomorrow at 7 p.m. And on Thursday, I will do an exclusive webinar for our PMS customer. And the same day, evening, Mohit is doing a very interesting webinar on the housing loan, how you can basically get maximum out of your housing loan application. So please attend all these webinars, except PMS. You can't attend because they're only exclusively for the PMS. For the other 2 webinars are open for public. Please come and join me. With this, thanks a lot everyone taking time out. Good night. Take care.